Joining us now to discuss BTC price and more is Walter Hessert, head of strategy at New York-based crypto trading and custody platform Paxos. Walter, great to have you. So, for weeks on end, we've been talking about Bitcoin and its low volatility, even lower than bonds, than the S&P 500. And analysts were saying something's got to give. Now we're seeing Bitcoin, they said, it would bounce one way or another. Now it's bouncing up. So I guess the next question is whether or not this rally has legs or will be short-lived.
Well, I think what we continue to see from Paxos is, although some of the retail trading and activity has slowed, we continue to see a lot of interest from institutions moving into the space, especially at the infrastructure layer, and new partnerships being created and infrastructure being put in place to enable new entrants into the market. And so I think that positive news, will continue over the long term, of course, to drive additional rallies in the price. Of course, we have a lot of economic news, which we will have yet to see over the next couple of months, such as the rate hikes, et cetera, which will play a big part too and are difficult to predict.
Yeah, we're expecting third quarter GDP numbers coming out tomorrow in the United States. Also, I wonder if you could outline your expectations there and, what the Fed reaction might be. Everyone's watching what might happen at the Fed meeting next week.
Well, I think that the forward curve, I still think shows us getting to over 400 bips by the end of the year. And we saw a lower than expected rate hike from Canada yesterday. But there's still pretty high confidence that we're going to see a large hike coming up here at the November meeting. And so we'll have to see how that plays out.
All right. Meanwhile, you mentioned that you think part of what's driving Bitcoin's bounce today is that institutional adoption, and you're partnering up with Mastercard to help banks offer crypto trading. Tell us a bit more about that.
Yeah, I think that what we continually see in the market is proof points that a large part of the population wants to access crypto through trusted partners, through trusted applications and businesses with whom they already do business, and specifically businesses with whom they do financial services businesses. And so the best examples of that, of course, have been the success we've seen from buy, hold, sell solutions from companies like PayPal, Venmo, Mercado Libre, Nubank, and we've seen this happen all over the world. And I think that one of the most exciting segments that has yet to really offer this suite of buy, hold, sell solutions to their customers is banks. It's still very early days for banks. And so what we've done with Mastercard is offer Crypto Source, which will bring a suite of solutions to banks globally to offer buy, hold, sell, and other crypto products to their customers.
How has the response from banks been? I mean, throughout the history of crypto, banks have been quite fickle around crypto, sometimes for, often against. So, are you feeling that sentiment turn and, warmer toward crypto?
Yeah, absolutely. I would say, surprisingly, even despite the huge pullback in price over the last 9 months, that interest from financial institutions has steadily increased throughout that time period. And I think that's because they're hearing it from their customers. They're hearing from their customers. They'd like to access these products through their accounts with these financial institutions. We've certainly done surveys over and over, and we've seen these done across the market. And what we consistently see is a large percentage of the population citing that they would like to, or they would be most comfortable accessing crypto and other crypto-related services through trusted financial institutions with whom they already have business in an account. And so I think the banks are really taking that feedback into account. And although we're in a period where the retail activity has slowed, they're looking longer term and saying, how are we going to be prepared and how are we going to meet the demands of our customers? And that reaction is really driving a lot of interest and growing interest despite the slowdown in retail trading and the pullback in price in overall Bitcoin and other crypto markets.
Do you find that ironic at all? Because a lot of proponents of Bitcoin say that the whole point of Bitcoin is to eliminate these intermediaries, like banks.
Yeah, I think that there is a sense of choice. And there has always been this account-based system where you could only ever access most financial assets in the financial services industry through these closed membership-based institutions like banks. And I think that that certainly has served a lot of value in a ton of different ways and created a ton of growth in the global economy. What crypto offers is a way for us to have a token-based economy outside of that, potentially, where people can have access in a self-sovereign way over financial assets, over cryptocurrency assets. But that certainly doesn't mean that that is the way the whole world is going to choose to access and interact with those products. And I think what we've seen through the success of some of the tech companies who've been real leaders in this space, like the PayPals of the world, is that a lot of the population wants to access these assets and this new technology through products that they already know and trust. And so although there is a kind of driving interest in creating a new system, a more open and accessible system, that certainly does not imply that all financial institutions are going to be disintermediated, and certainly not those that are leaning into the innovation and figuring out how can they integrate this into their offering, how can they create this type of access for their customers. And that is really what this partnership with Mastercard is about.